Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, busy week, Curtis, again, as always, but plenty going on at the minute. And you can tell we're getting into kind of the event season, awards season, dinner season now, aren't we? That kind of happens at this mid-year point. And then again, obviously, in the sort of November, December time at the end of the year.
Yeah, definitely. And this is our first pod of June, so we're halfway through the year. And loads going on in the news. There's certainly no slowdown at the moment. And we've got a few shout outs. The first one goes to an old industry friend of mine, Nancy Rignall from Prospecting Dynamics, who said some rather nice things about us on LinkedIn. She enjoyed the interview we did with Robert Forrester last week, and the show also included Ian Godbold, of course, and she does say how much she enjoyed this show. So thanks for that, Nancy. I know you're a regular listener, and much appreciated.
And hopefully we'll hear you on the podcast in the future at some point. And the other one that's got a lot of interest this week, and we kind of covered it on last Saturday's podcast. We did something a little bit different last week, as you'll remember. You heard a little bit less from Curtis and I, and we played the Robert Forrester interview as the second half. But we actually shared it on its own on first thing on Monday morning this week, and that's, again, I mean, it always gets a good listenership, doesn't it, and very good interest in from the market who really do like to hear what Robert's got to say.
He was on top form, wasn't he?
Yeah.
As ever. And in the second half of this week's show, we'll have an extract from our latest supplier special with ETT. Now, they're a UK startup that's using AI to pretty much transform customer call handling. And we did catch up with George and Adam from ETT, and we'll have an extract from that in the second half.
We did. And the other thing that we're just giving a quick shout out is from the work that I do with the remarketing advisory board, which is part of Fleet Europe, is an event coming up in Frankfurt on the 25th of June, which is their first used car retail summit. So this, obviously, we have later on in the year is their annual summit that they have, and I think this year that's going to be in Luxembourg. But this is new, and this is taking place there in Frankfurt, and we will share, and you might have seen it on my social channels this week where I shared it, where you can use the QR code if you want to attend. But that looks like a fantastic lineup. I'm not going to be personally there. Colleagues of mine will be there, and friends from across Europe will be attending, but that's going to be great. But that kind of, when we were talking, Curtis, that took you back a little bit, where you remember the days of the motor shows in Frankfurt there.
Yes, yeah. Back in the day, the manufacturers used to organise drives to the Frankfurt Motor Show, and I do remember driving there and driving back and spending, I think, 3 days at the show. Now, anyone who went to the old Frankfurt Motor Show will know that it was over 20 odd halls. It was a mega event, and you'd end up walking miles and miles for 3 days and then doing a long drive home, and it was an endurance test. After that, I tended to go for the fly-in fly-outs in a day.
You do right. But if anybody is wanting to attend and you're not aware of this event, 25th of June in Frankfurt, drop me a note if you'd like, or just check out the social channel, or go over to Fleet Europe and you'll find the details there for the event.
You're listening to the Motor Trade Radio podcast, powered by Motors.
So, as we've said, lots of headlines this week, and they come from AM, Motor Trade News, Car Dealer, and Autocar. Starting with new car market returns to growth after April dip as heavy discounting lifts EV registrations. Cox Automotive is cautiously optimistic about the new car market, forecasting a rise in registrations this year. And completing our look at the new car market, car buyers say they want government incentives before switching to EVs, finds the latest research from Judge Service. Then, after the break, we'll look at what the FCA is considering in terms of its potential motor finance redress scheme. Stellantis and Marshall Motor Group terminate their dealer partnership. And we'll finish off with the latest news on new brands coming to the UK, with confirmation of another new entrant due in October as another brand cancels its plans to come here.
They do love us, don't they, Curtis?
They certainly do. That list is getting longer, but we can now take one off that list.
Yeah. I mean, we need to do that full lineup again at some point when we get full clarity on it. But as Curtis said there, we're heading over to the AM online initially for the headline of the new car market returns to growth in May as EV discounts spur uptake, and this is on the back of the results for May that came out on Thursday morning of this week, with 150,000 units being sold in the month of May, which resulted in a 1.6% year-on-year growth. But obviously this uplift is being led primarily by the fleet and business registrations, whose registrations grew by 3.7% and 14.4% respectively. So really taking up that nearly 2/3 at 62.6% of the market again in May, which is really highlighting the challenges in the market around that consumer confidence and private channel registrations, isn't it?
Yeah, because private sales were down 2.3% for the month, accounting for 37% of the market. And you and I remember back in the day where the market was pretty evenly balanced between fleet and retail. But as you say, fleet and business certainly taking the lion's share, and have been now for, many, many months, if not a couple of years. So within the stats, and it's always fascinating to dig into these stats, battery electric vehicle registrations rose sharply by 26%. So they accounted for a 22% market share as manufacturers turned to significant discounting and strong incentives to stimulate demand. And looking at the other fuel types, sales of plug-in hybrids were up by 51%, while hybrids were up 7%. Petrol and diesel registrations, by contrast, dropped 12.5% and 15.5% respectively. So no surprise there on the ICE front.
No, not at all. And I think, there is obviously, the highlight on this one is that, as we said earlier, that fall in private registrations, because in the month it fell again by 2.3%, taking a market share of 37.4% compared to 38.9% at this same period last year. So really, as we said there, highlighting that challenge of the market. But again, we were talking just before the recording that you can see where a lot of these plug-in hybrids and battery electric vehicles are being through that fleet market, the benefit in kind, the grey fleet market. So it's not the consumers that are buying this growth of the battery electric vehicle or the plug-in hybrid market.
Yeah, definitely. And looking at the market as a whole, whilst the growth in BEVs is notable, it remains at just 21% in the year to date. So that's still a long way short of the 28% required under the ZEV mandate. Now, I have got some winners and losers for the month. I'm not going to go through them all. These, as ever, what I do is I print out the A to Z list of manufacturers and get the highlighter out. And these are the ones that really sort of leapt off the page, starting with, and this is all in alphabetical order, BYD. They had an absolutely stonking month because they were up 407%. So in real terms, that means that their sales rose from 590 last year to over 3,000 this year, which pushes their year-to-date sales up by 570%. So in terms of winners, that they are by far and away, ahead of everyone else. A couple of other sort of worthy OEMs to mention in terms of sales increase. Ford, who haven't had the easiest of rides over recent years, they were up 5% for the month, and they're actually up 4% in the year to date. So good to see some recovery there from Ford. Looking at some of the new entrants, JQ, so they haven't been on sale for a year yet, so no year-on-year comparisons, but they actually accounted for 1,679 sales over the course of the month, fairly similar to their sister brand, Amoda, at just shy of 1,500 units. So definitely some growth there. Looking at one of the, I suppose we call them legacy brands now, Renault, they had a good month. They were up 37%, and in year to date, they're up 21%. And Volkswagen, pretty good showing. In the year to date, they're up 13%, and in the month they were just up 0.5%. But their run rate is looking pretty good. But there's some of the brands who didn't have a particularly good month or year to date include, surprisingly, Dacia, because they were pretty much the darlings of the retail sales, but for May, that they were actually down 19%, which in the year to date they're only up 0.3%. DS, I was astonished by this, that they sold just 141 vehicles in May, and their sales are actually down considerably in the year to date by 25%. So one to watch there.
Yeah, some listeners might not be shocked with that one, to be fair, Curtis. But
well, even more shocking was GWM, which we've talked about a fair bit on the show as a new entrant brand, but they sold just 33 units in May, and their year-to-date sales are down 74%. So for a new entrant brand, that's a pretty miserable showing. So we need to keep an eye on GWM, I think.
Yeah, I think we're going to get to that point out in the future that what these brands that do manage to gain market share here in the UK, and those that just struggle, and our GWM going to be one of those that they do exit the UK if they can't turn that around. We, as you say, there's others, but we'll talk about some of them later on in the show. And just before Curtis runs through some of the van LCV market for some of the European and more global markets, France were down 12.3% in the month of May to just short of 124,000 registrations. Germany, not much dissimilar to us, with a rise of 1.2% year on year, and that would equate to just over 239,000 registrations. Italy marginally down by 0.2%, down to 139,400. Spain up 18.6% to 112,800. And interestingly, the US, with everything going on in the US, actually rose in May 1.4% to 1.5 million registrations there in the US. So it's going to be very intriguing these European markets and what will happen in the US as we look towards the rest of the year.
And looking at van sales, as we record this, there wasn't any coverage in the media. So what we'll do in the newsletter that goes out on Monday is we'll put a link to the SMMT press release, you can check out the full story. But just in brief, new light commercial vehicle registrations were down 11.8% in May, and that's actually the 6-monthly decline in a row. Electric van uptake was actually up by 50%, but market share is still just half of those mandated levels. And the SMMT continues to urge the government to back market regulation with equally bold infrastructure targets to encourage those EV sales.
Yeah, so the year to date for vans still there. They're struggling with the sub 3.5 ton down year to date by 11.5%.
And moving on to the next headline, it comes from Car Dealer, and it is Cox Automotive cautiously optimistic about new car market with registrations set to rise. So I won't steal all your thunder on this one. I know it's one that you worked very closely on, but it is interesting as we reach this midpoint of the year where we're starting to see how the market has tracked, what the forecasts are. So with Cox, you've released your new forecast for the year, which estimates over 2 million registrations in the 12 months to the end of December. And that figure would actually represent a year-on-year rise of 5.7% and a 29.1% rise from those COVID-affected years of 2022. But despite still being 9.8% below those pre-pandemic averages. So what's actually driven this forecast?
Yeah, I think the key with this, I mean, this has come out of the latest IQ, the Insight Quarterly report, but I think clearly what we're trying to get across here is that we are on track for a 2 million market now. You can question whether it be 1.9 something or 2 million and something, but we're going to be within there and thereabouts 150,000 units of that 2 million, which will be a positive story for the UK. The thing behind this, and we talked about it in the previous story with the May results, there is how that 2 million is going to be made up. What manufacturers are going to make up that 2 million, which legacy OEMs are going to be losing market share to these new entrants that are coming into the market. We know on the recent podcast we talked about Shanghai, who have been in the UK for some time with an R&D facility, but they're going to have operations up in September. We're going to be talking a little bit later on today's show about others coming into the UK market, and we've just been talking there about BYD alongside your Moda and your JQ that are making a big impact in that hybrid and EV sector at the minute in the UK, and really capitalising on those company car schemes of good taxation, getting the benefit of either a full EV or of a hybrid technology. So, and something a little bit different at the right price point for the market. So, I think essentially trying to sort of highlight what is happening behind the scenes of these headline figures, and obviously calling out there that my forecast for the year is going to be about 23-24% EVs, which will again indicate a shortfall of the 28% target for the ZEV mandate. I think the SMMT have come out recently as well, about 23.5%. So again, the SMMT are not optimistic that overall we'll get to that 28% ZEV mandate benchmark by the end of this year. So I think that's really what we're trying to call out in the market, that the headline figure tells part of the story, but it's what's behind that figure. And you and I talk about all this time with Jeremy Yeh from CAP, don't we? It's the detail now. It's what is going to make that 2 million is what we're trying to get to.
Yeah, definitely. And I will be going over these figures in our first episode of January next year.
I'll show you what, I can say though, guys, 90, I think May was 98.8% accurate. Year to date is 97.8%. So whilst I'm in the high 90s of accuracy for my baseline, I'll take it.
That's not too shabby.
I'll take it, yeah. But we head over to the next story now, and I know this is something that you've worked on with Judge Service and the guys there, that Motor Trade News, car buyers want government incentives before switching to EVs, finds Judge Service, saying that 81% think the best way to drive EV uptake is by introducing incentives, including lower tax or a scrappage scheme. I mean, that is something that we really do need, isn't it?
Yeah, definitely. Fascinating research. I did see the data on this, and as you say, did work with the guys at Judge Service on this. So it's part of their ongoing consumer research, and the results do actually shed an awful lot of light on what consumers are actually thinking, because month in, month out, when we go through the SMMT results, the new car regs, we do look at, as we've just done, retail demand, how EVs are doing. And the messaging here is loud and clear that retail buyers who maybe are considering switching to EVs, they want incentives. They don't want to be paying extra for the benefit of going into EVs. So, as you say, 81% think the best way to increase sales is for the government to bring in some form of scrappage scheme or lower taxation, both of which the government has rejected. But hey, U-turns aren't
You never know, do you? Yes.
you never know. No, while more than 2/3 expect the government to further water down the ZEV mandate, which, as we've said, currently targets 28% of all new vehicles by the end of the year. But the buyers expect that to be watered down by the end of the year. So we'll see on that. However, I mean, this was particularly notable. Buyers are actually divided on their views of the government's ban on the sale of new ICE vehicles and hybrid cars by 2035, because the move is actually supported by 35% but opposed by 43%, whilst the remaining 19% are undecided. So it's not as though car buyers are against the move. They can see the reasons and the logic behind the move to take ICE vehicles or new ICE vehicles off the road. So they are receptive, but they just need a little help, a little assistance, and incentives.
Yeah, I think that is a clear message now. I mean, we know that new car market, whether we get to 23.5, 24, or even the 28%, the direction of travel is there. You can see that in the May numbers, and you can see that in the year-to-date numbers of those BEV registrations. But the consequence of this is they've got to come out at the other end. They're going to be deflated. They come back into the used car market, and that is where the volatility is. That's where the caution, the risk is, particularly around residual values and from the dealer market. And I think Jeremy A talked about it on his recent catch up at the end of last month, that it's that, there is caution still in those used battery electric vehicle markets, and we just need something to get that stimulus put in there, that they are a good proposition for that used car buyer.
Yeah.
But at the minute, whilst you've got this gap, so much incentives coming at the new car side, it makes those used ones look very expensive, particularly in that 0 to 24-month marketplace. So we will see. But we'll be back after a short break, so please do stay with us.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Companies already featured on our supplier specials include Generational, Tracker, MTC, and Jigcar. So if you'd like us to profile your business, then just get in touch with Philip or myself. We're both on LinkedIn. But next up, we have an extract from our latest supplier special with E38. Now, they're a UK startup that's transforming how AI can be used for customer call handling. And here's ETT discussing how to use AI to personalize customer conversations. So they were both really good illustrations of the technology that you're actually providing to other sectors, and now the automotive sector. So, George, can you take us through some of the tech behind what we've just listened to and explain how it can help dealers to better manage their incoming customer communications?
Yeah, sure. I'd love to. I'm not going to get too technical, so I'm going to try and keep it as simple as possible. But what you heard was effectively, it's a natural language processing AI model with natural voice that's laid over the top.
Yeah.
Everybody hopefully listening, or even yourselves, have played around with ChatGPT, played around with Gemini, or Facebook's or Meta's Llama. They are what you call LLMs, right? So they're natural language models, but require text input. Now, what this solution sits on is a proprietary version of effectively an LLM. An LLM effect is a predictive, it's a predictive language model that sucks up as much information as possible. And for every installation, there is effectively a big discovery phase that we spend time on to basically absorb and create a big data repository of your business. Now, that could be documentation, it could be we could create new documents, could be brochures, could be anything and everything that we can get our hands on. And then we create basically a structured database that the AI will then read and digest and ground itself upon. The difference here, though, and this is actually a very big fundamental difference, is that it's an LLM that sits underneath this. It isn't a voice or a text-to-speech voice service that sits on top of an FAQ, which is probably about 80% of the market today, that have deployed some type of voice assistance. And most businesses that are creating this type of technology, really everyone is taught to a web bot, right? They're on a website
Yeah.
and they'll go and type in and you'll get some candid responses. Most AI voice chats that you speak to are based on that technology as a simple evolution of that, or a type 2 innovation of that.
Yeah.
This platform itself was completely built by the ground up. The original engineers of this technology are actually the original engineering team from Apple's Siri. They've been going since 2015, and it's taken a lot of time and obviously a lot of investment to really try and get that natural conversation point in place. And the difference here is because it's powered by an AI agent that has a lot of robotic process in the back end of it. We're actually able to interact and integrate with existing systems. So, if like on you heard on the call, a booking system for tables, or a booking system, in the automotive industry, like a service bookings, appointment booking systems, any type of computer or digitalized system we can interact with, and then our system can correlate a conversation into an actual system input, basically. And it can all be done, relatively through the proper design and development in a space of 6 to 8 weeks.
Well, that's what I was going to ask you, George, because you mentioned the application for service departments. So,
Yeah.
for the benefit of listeners, what would that actually entail? So, a dealership, a dealer group is interested in introducing this into their after sales. How, what sort of process does that actually entail?
Yeah, absolutely. So, actually, the process is relatively simple, and we're a turnkey solution provider. So, what that really means is we do all the heavy lifting, right? You want to focus on your business, you want to focus on your customers, and you want to focus on your customer experiences. We come in and effectively understand. We will do a discovery across the applications you're using or the systems you're using, and then we will look at the integration points. Most applications today will have some type of API integration, and then we will build those API integrations between the AI agent and then your systems themselves. So it's just a clean integration, really, and then it's fully documented. And we can do that multiple. One call, you could probably interact with as many different systems as required, and as many as you need, really. But yeah, the process doesn't take that long at all.
Well, it's a whole new world, isn't it, Phil? And it is fascinating to hear how AI is being used in the car retailing sector, and the difference it can make, and how it's not replacing anyone. It's reducing, isn't it?
Yes.
Some of the job functions, some of the and sort of automating some of the job functions.
Yeah, I agree. I mean that we've played in that full interview there with George and Adam. We played a couple of examples of where that AI personalization is being used in other industries, and as you say there, Curtis, it's coming to the automotive sector very, very quickly, and even in our recent conversation with Robert Forrester, where he's using AI in different ways across the business there. But as you say, it's about that efficiencies, it's that personalization. And I mean, I don't know about you, but you do worry sometimes that when you do ring somebody, you're kind of trying to work out whether it is AI that you're talking to, or you are talking to an actual person these days. You're trying to listen out for those little nuances of they are getting that good now in some of those. Bots.
When they start to factor in regional accents as well, and they are very, very convincing in that you can actually have a chat with these AI agents, and it's an area that's going to make a lot more sense, and it's certainly going to grow and grow within the car retailing sector, as you say, because dealers can achieve these efficiencies, and it enables staff to get on with their jobs.
Exactly. So if you've not listened to the full interview from earlier on this week, it's on your podcast feed from, I think, Wednesday morning on the 4th of June. There is an offer for Motor Trade Radio podcast listeners from ETT. I think it's a 4-hour consultation offer to help you improve your business personalization through AI and ETT. So do reach out to either George or Adam, and the details will be in the newsletter on Monday morning.
Meanwhile, back to the news. So the next headline comes from Motor Trade News, and it is FCA outlines key considerations for potential motor finance redress scheme. So this is a story we've been tracking for a number of months now, and Motor Trade News worth heading over to their report on this, because it's a really good update. So saying that the FCA has detailed issues it would need to address if it introduces a consumer redress scheme for historic motor finance commission complaints. And I think we can read into that a redress is almost certain now, and it's just a matter of how it's applied and who it's applied to.
Yeah, I think you're right. I mean, this was published from the FCA on Thursday morning of this week. So it's kind of been there in the background. Everyone was waiting for when something was going to be announced, and the reports are that it was going to be by the end of July, after the Supreme Court proceedings at the start of April, if I'm correct. So I think this is the first stage now. I mean, this is indications that something is imminent to be announced. I think the question this now, like you say, is what is going to be the process? What is going to be the redress with this? Obviously, it's indicating that there is going to be some kind of redress. I think for the dealers listening this morning, the big question is, whether they will be impacted by any of this redress from the lenders is the big question that's been sort of discussed across the sector, which is when you've had people like the NFDA with Sue Robinson heavily involved with this, as well as the Adrian Dallis from the FLA. They're looking into this very cautiously as to what might be the result. So I think this is clearly now something is happening. It's happening soon. It's just what that process is going to be and what the financial impact will be at the end of this. But clear indications that we are expecting something very soon now.
Yeah, and this is very much focused on those discretionary commission arrangements which were banned in 2021. So it's seeing what form of mis-selling occurred prior to that. And the piece goes on to say the final outcome will depend on the forthcoming Supreme Court judgment, which we think is going to be sort of July time, don't
They
we?
do think it's going to end of July-ish, yeah.
Yeah, which the FCA said it cannot predict, but in a statement issued last week, the FCA said, if following the outcome of the Supreme Court judgment, we conclude motor finance consumers have lost out, it's likely that we will consult on an industry-wide consumer redress scheme. So that's very much the update that we were expecting, but it's now in writing.
Yeah, I get a feeling they'll know a little bit more, but they'll be working on it behind the scenes, because I think the Supreme Court will be passing it to the FCA to do the redress process. But we'll carry on. So a little bit more from the OEM side now, and looking at the story there in Car Dealer, and jobs at risk as Stellantis and Marshall Motor Group terminate dealership. And this is that Marshall Motor Group and Stellantis terminate dealer partnership by mutual agreement. Termination will lead to the closure of 4 Peugeot sites and 1 Vauxhall dealer. 5 sites employ hundreds of people who may face uncertain future, and an insider accused bosses of using purposely confusing jargon. But we'll get to that later.
Yeah, it's an interesting story, this one, isn't it? From Car Dealer, written by Jack Williams, that they picked up on coverage that was in the Sun, and they've gone into more detail. But the facts of the case is that Marshall currently represents Peugeot and Vauxhall at 5 sites across the country, but all now look set to close as a result of this termination of the partnership between Marshalls and Stellantis. Now, staff were informed of the news last week, with operations set to officially shut at the end of this month. So the affected sites include showrooms in Cambridge, Gatwick, Medway, St Neots, with Marshall also closing its Vauxhall dealership in Ipswich. So this is quite a significant move, isn't it?
It is, yeah. I mean, obviously, there is a lot going on, and I think talking to somebody the other day, he described the dealer sector as musical chairs at the minute. That every day you're just starting to see these closures and swap over of brand representation in territories that seems to be taking place. But again, it's never a good thing when dealerships, and particularly when you're talking 5, legacy volume OEM dealers closing, because there is, think about that after sales, and think about the staff involved and the years that they've been there. It's not great news, is it? But it is a matter of fact in the UK and across other markets of this consolidation of the sector.
Yeah, because the piece does say that there's around 60 staff at each location, and that is a significant number of staff that look as though they could be losing their jobs, depending on how Marshalls handles this, how many staff it can redeploy. And within the story, it does actually quote this insider who contacted the Sun, saying, staff at all 4 branches have been told the exact same thing. I think that's the Peugeot branches. There is a lot of purposefully confusing jargon being thrown around, but essentially they are not renewing the contracts with Stellantis. They didn't give staff any particular reason. It doesn't seem to make much sense to them. So, you can understand the feelings amongst the staff there, that uncertainty that's hanging over them.
And we know what Car Dealer like. They like to speak to the people at the front end, don't they? There's a little couple of paragraphs right at the end of the story there saying that a source, and this is verbatim what they said, so a source who worked at one of the affected sites told Car Dealer at the time, we were blindsided by it, to be honest. We just didn't see it coming. When the directors came down to tell us last week, they said it wasn't linked to performance, and basically it's because Marshall is downsizing its number of Stellantis sites for whatever reason. They gave us the usual bleep. If I had a bleep, I'd bleep that. About, I haven't got one, about the tough market conditions, but that is what it's coming down to. So really, some not happy members of staff there within that organisation at those sites. So very unfortunate, but as I say, sign of the times with some of this that's happening. But we'll move on here, and the final two stories looking at, as Curtis alluded to right at the start here, is that new entrance market list is changing. It's 1 minute going up, 1 minute going down. So the first one is with Autocar, and this is the Neo Firefly confirmed for sale in Europe, set for UK by October. So this is the new Neo Firefly Chinese rival for the Renault 5 and incoming VW ID2. Has been now confirmed for Europe, and the UK sales should soon follow. So really saying that we are going to get this product in the UK, and this is that the new vehicle is a Chinese electric vehicle. It offers a range of 260 miles. And has a equivalent valid price of about £12,500. So, really, I think because at one point Neo was coming, then they weren't coming, and then they're coming again, weren't they? I think
they've been in, out, out. Yeah,
like politics.
Well, yes, exactly. But this looks as though October is the month to look out for. And this all really hinges on right-hand drive. And within the story, they do quote the NIO president, who was speaking at the recent Shanghai Motor Show, saying that the brand would actually launch a right-hand drive variant for the UK by October. Now, although NIO has yet to announce specific plans for a UK launch, certainly having told Autocar that it was continuing its preparations for entry, the comments suggest that the launch is imminent, and they are looking at other European countries. In fact, they're looking at 16 new global markets, but certainly within Europe, they're looking at Austria, Belgium, Czech Republic, Hungary, and now, as we know, the UK. So there's one brand definitely coming to the UK, and you're going to tell us about one brand who definitely aren't coming to the UK.
Yeah, well, this is VinFast, and we heard a lot about VinFast in the Vietnam's manufacturer there, albeit I think the much of the product behind it is from China. So it looks like it's a bit of an outpost for the Chinese manufacturers going into Vietnam there. But they've now confirmed, after saying that they were entering the UK market, that now they are not, and that VinFast Auto, the Vietnamese car manufacturer, has cancelled its plans to begin sales of its electric cars in the UK. So this is a kind of a bit of a U-turn there now, saying that they're just not. They've decided they're just not going to come in, are they? They've decided to take UK off the market, and that it's just a market that they're not looking at moving into.
Yeah, and it's a good story in AM. I didn't see this covered anywhere else, but it's written by Tim Rose at AM, and he actually quotes a piece that AM reported back in 2022 that VinFast was coming to the UK and was due to launch in late 2023. So fast forward 2 years and it hasn't happened. But it did actually appoint former Polestar UK and Genesis executive Andrew Pilkington, and he had the remit to establish a sales and marketing company here, and did make some progress along those lines. But this report does actually highlight that it has since closed the fledgling VinFast UK operation and cancelled its plans to compete in the UK market. So that's one off the list, Phil.
Yeah, that's one you can cross off there, Curtis, for definite. So, but you never know. You never know.
Never say never.
We did talk about Neo at one point, leaving and
Yes.
then coming back again. So yeah, never say never on these kind of things. There's a lot of flip flopping going around in the world at the minute, isn't there? But I think that's it for this week. We said, have a listen if you've not listened to the Robert Forrester interview from last week's Saturday podcast in the second half of that, or on its own on Monday morning we shared. Never let you down with that Robert interview. Always fascinating, always open and honest on what he's got to say. So do have a listen to that one, and do have a listen to the ETT interview from your podcast feed on Wednesday of this week. There with Adam and George, talking a lot about that personalization, chats, conversations, and fascinating, being able to make bookings and things like this, and out of hours appointments and everything else that you can do now through this AI technology. So do have a listen to that. And as I said earlier, if you do want to take advantage of the offer to Motor Trade Radio podcast listeners, that's a 4-hour consultation support with the team there at ETT. Please do reach out to them for that and take advantage of that if you want more conversations with those guys at ETT.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.